Hello, my name is Menno Pietersen. I'm a web designer and expert at economy for the portfolio CARUS-AR, and here are my 7 tips for the next 2019 crypto bull market. Rule number 1 in crypto: never invest more than you're prepared to lose. This is still my rule number 1, doesn't matter how much the markets turn. Please never invest more than you are mentally and financially prepared to lose. Crypto is risky, your swings can be very extreme. The market can go up 20, 40, even 80%. Be prepared for this. Rule number 2, not your keys, not your coins. A common phrase for many people in crypto. What this means is that you need to have access to your own private keys to your crypto. Do not leave your coins on an exchange or in wallets that you do not own yourself. This is a very good rule, especially if you just buy Bitcoin or just buy Ethereum long term. Apart from not your keys, not your coins, is there an argument to be made for non-technical people or people who are looking to diversify their crypto without the hassle of managing a lot of keys and a lot of coins? Companies like Coinbase and Economy provide simple solutions for people who are looking to diversify their crypto without the hassle of managing a lot of keys. This means that you're sacrificing a little bit of security, you're not managing your own keys, for the ease of access to a diversified crypto portfolio. Rule number 3, have a plan and stick to it. Crypto is very hectic, it can be an emotional ride. The swings are big, 50% profit, 30% loss, 80% loss. How are you going to handle this? Make sure you have a plan. Can you sleep at night? Will you prevent yourself from panic selling? How much of your coins will you hold long term, no matter what? Your hold portfolio. How much of it will you trade? And if so, at what profit will you sell some of it? Where are your targets? How long will you invest? What is your scale of investment? The risk you take will be different for everybody, of course, but smart investors make a plan and stick to it. Number 4, consider dollar cost averaging to buy into your crypto. When do you buy? What is a good time? I will let you know a secret. Nobody knows. Sure, you could get lucky and buy exactly the right time, the bottom of the market. But a better way is probably to plan your crypto investment. Buy a little now, buy a little next week, maybe next month. And a good strategy, called dollar cost averaging, is spending the same amount in euro or dollars every week or every month. Let's say you want to invest $1,000. You could buy $100 every week, 10 times until you met your target. This way you have bought at an average price of that period. You prevent and neutralize short-term volatility in the broader markets. It's just a very nice way to get into your investment. Rule number 5, take profits on the way up. Taking profit should be in your plan of tip number 3, but it needs to be repeated. Make sure that you take profits when the market goes up, when your targets get hit. Have a plan for this. Some suggestions could be: sell a fixed amount in percentage of your portfolio every week, day or month. Once you have nice profit, sell the same amount of euro or US dollars every month. Sell any profit you make every month. Keep your initial investment. These are just a few examples of strategies, but make sure you pick one. Don't be the person who has a lot of profit but never sold at all once the market crashed again. Rule number 6, don't trust anybody. Crypto is a new, unregulated and exciting place, but this brings a lot of criminals as well. Scammers are everywhere trying to steal your Bitcoin, steal your private keys or hack your computer. Don't click on links you get randomly in chat rooms, don't open spam email, and don't randomly invest in other people's projects. Don't trust anybody. Good security measures you can take are using a VPN on your computer, always applying two-step verification like Google Authenticator for your cryptocurrency websites, and consider investing in a hardware wallet like the Ledger Nano S for storing your crypto. And tip number 7, the final one, is diversifying your investment. Some Bitcoin maximalists will disagree with me, but just like the traditional stock market, diversification can be a really good thing. Depending on your risk profile, how much risk you want to take, you should consider diversifying. Maybe buy Bitcoin as well as Ethereum, as well as some Ripple, maybe some Litecoin. and maybe even other altcoins. Having been in this space since 2015, I've noticed that during bull markets, diversified portfolio tend to outperform just holding Bitcoin. However, during bear markets and crashes and corrections, holding Bitcoin is preferable. So which will win in the long term? It's hard to say. Just like in the traditional stock markets, a good strategy is simply to diversify. Economy has created a nice service where you can simply click on a portfolio of diversified crypto, pick on a few strategies and invest in those. My portfolio on Economy is called CARUS-AR. In one click you can follow my portfolio. Please, again, never invest more than you're prepared to lose. This is a risky space. But I do honestly think that the potential of this ecosystem, crypto as a whole and Bitcoin and Ethereum as well, is potentially very, very large. Having a small percentage of your available funds in this space could be a very smart investment.